Are these markets climbing or are they crashing? Well, I'm going to take you into the S&P 500 and I'm going to show you the trigger for the next down move or the trigger for the next up move. I think we are still on high alert. Why are we having a good day in the markets today? Well, Apple is potentially loosening up those purse strings and is promising to spend even more money. But is this just a stunt? Is the actual turnaround story for Apple going to be a little bit more difficult than just promising or upping the ante on their future AI spend from $500 billion to $600 billion? Is that news story today enough to pile back in? Well, I'm going to go over that. I'm going to show you the Apple chart. Apple and Tesla had a very nice day today. Why did they run up? Well, they ran up because they had been already down on their lows, and I still think there is some profit taking from other stronger big tech companies and some rotation over into Apple and Tesla. Are Apple and Tesla getting ready to run? Well, I'm going to take you into the charts and show you what it is I'm watching for and what the trigger is to confirm whether Apple can get higher than 216.50. This is an area, it's been the wall for Apple. We had traded this before earnings from around $202 all the way up to $216, and I was hoping for continuation and a move all the way to $226, but it just didn't happen because there's too many problems that Apple's dealing with right now that are yet to be resolved. Well, we got a nice news catalyst, and there was a lot of analysts, including myself, who had said that if Apple pulled back underneath $200, anywhere in that $198 range, that they would add to a position to go long again. And on Friday, that's exactly what I did. I had sold my September calls the morning after earnings, and on Friday, I rolled some money into October calls. Now, those have proven to be profitable, and some folks followed me in that game plan in the Stocks with Josh Discord, and we're up good. We're up nice. Is it time to lock in those gains, get back some of the other money that didn't win on Apple, and walk away with a little bit of a break even? Or are we going to hold this and hope for it to continue to climb and hit that 226 target? I'll take you into the charts and I'll let you know what it is that I think we need to see in those charts. This is the Stocks with Josh show. Thank you for joining me. Thank you for hitting the like. I want to remind you guys that there are scammers who impersonate me. Even if you come over to the Stocks with Josh Discord, that's my pro trading community, I will never DM you and I will never offer to copy trade. But wherever you find me, there's going to be people that use my picture and my name and they try to reach out to you. It's not me. Okay, you can chat with me directly in the Stocks with Josh Discord in the chat channels. You can find me over there. That's where we can connect. But I will never DM you. Thank you for hitting the like and hit the subscribe if you need help trading these choppy markets and figuring out what is the next step on Wall Street. On that point, let me be very clear. July was an easy month. Volatility was very low, but the minute we entered into August, things have become a little bit more volatile. And I'm going to predict that that's going to continue to be the case. August is not going to be a move back to the highs and a slow climb from here. There's a lot of uncertainty. We're going to see things like we saw with Apple, which was a flush down, then a turnaround and a pop back up. These are the opportunities that Wall Street is giving us, and these are the ones we got to take. All right, guys, let's jump into the SPY real quick. I want to show you what I'm watching and what the triggers are for a continuation to the downside and where support would be. And what does support mean? When I use the word support, that means where the price will stop falling. So let me show you the opportunity to the downside and to the potential upside, because even though I am seeing that we are likely going to continue to pull back, the market has been pretty strong. And as the old saying goes, the market can remain irrational longer than you can remain solvent. What does that mean? Well, sometimes people try to get into a put position trying to see the market go down, and then they get wiped out because they run out of time, because they have a short expiration date and it doesn't go down. It keeps going up. So right now, I believe that the remainder of 2025 is going to be bullish. I believe that we're going to see brand new all-time highs 30, 60 days down the road. But at this moment in time, I believe that we've entered into a period of volatility where we're going to have to test what is going to become the new pivot low on the S&P 500. I'll find that for you here in the charts, and then we can climb from there. So it's going to present a lot of opportunity, but it's going to be volatile. Let's go look at the SPY together. If you look at this cluster of candles, this is the current week and the previous 2 weeks. This great big red candle that we got last Friday was a bearish engulfing candle, and it has now become what I refer to as our point of control. Okay, which means that the opening of that bearish candle is our resistance, and the closing of that bearish candle could operate as some sort of support. If either the top or the bottom gets broken, that often is going to give us a continuation of that move, which means that if we pop back up above this 635, it means we're going to continue to go higher. Now, I doubt that right now, but it is possible. And if we break beneath the bottom of this candle, which is roughly right around 621, if we break beneath that, we're likely to go lower. Where are we going to go if we break down below the bottom of that red candle? Well, we're likely to go back, and what previously had been resistance becomes support. Well, previously, this was the all-time high between 608 and 610, and this is where the market had broken down in the past, and this is where we recently broke above. And so what we want to see happen is we want to see it bounce at 610, and we want to see this become long-term support for a continued move higher. Now, if we end up coming down and breaking through this 610 and we get rejected there, well, the very next major level of support is actually back here between 580 and 590, okay? That's the major level of support. And if we do end up getting that far down, there's going to be a lot of people who are going to be panicking. And as usual, they'll be afraid to buy what could potentially be the bottom for a long-term continuation move higher. Right now, I do expect us to have a continued pullback. The market showed a little glimmer of hope through Apple and Tesla, but these guys have really not been market leaders, and so I don't know that we can trust them to pull the whole market higher right now. Right now, we're within that bearish engulfing weekly candle, and we don't do anything until we break one way or the other. Now, I'd love to hear from you guys if you agree or disagree, or you think it's time to load up. Now, on that Friday's low, I did load up. I did load up on a bunch of stocks, and those have been up really nicely, right? The Apple position, Target's been doing really well. DraftKings has been doing really well. AMPX has been doing really well. A lot of other companies that I listed have been doing extremely well. But I believe that we're largely in a sell the rip moment, or put on a tight stop loss, because this is not just going to be an easy climb through the month of August and a continuation higher. I don't see that. And we're watching that SPY chart for this pop to fade and go back below the 621 and eventually hit 610. And that's where we're going to have a tougher decision about putting risk back on or waiting to see what happens with that 610 level. We'll follow volume at that point. All right, let's quickly jump into another chart. I want to show you the Apple chart. We're going to look at the Tesla chart and maybe even a quick peek at the AMD chart. Let's go check those out. All right, I wanted just to highlight for you guys, I was going to do a video on Tuesday, but I didn't get a chance to. In this morning's live, I told everybody when we were down here, I said, 158 is an area where we're potentially going to bounce. This is an area of support. Now, similar to the S&P 500, we did bounce here, but if we end up fading 158, then the next area of true support on AMD is this 144 range. And so this is going to be an area where I'm going to be watching to reaccumulate AMD, because I believe going into the end of this year, we could have another big move up, pushing AMD to 220, 240 level. That's my belief on AMD. Let's run into the Apple chart real quick. Now, huge move here. It paid to buy under $200, which is something I said, and we're back at 216, okay? Now, 216 is resistance. This has consistently been an area of basic resistance for a long time. We tested a bunch of candles here. We failed, we came back. And so this will just prove to be another area of resistance. if we don't continue to break higher. We have to watch volume at this level. In my opinion, it was worth locking in some gains, even though I do believe that if you want to hold on to it, we are eventually going to hit this descending level of resistance, and that's going to be the big test to see if we break above or if it pushes us further down. I think Apple still has some problems that it has to work out. And the way that we're going to tell on Apple if it's going to be something that's going to go back into a secular uptrend is really, we need to see some results. We need to see some AI. We need to see that translating into improving margins or improving sales, and then Wall Street will load back up. We need to follow the charts on Apple, and the charts will lead the way by looking at the volume. We know that most institutions have been unwinding their exposure to Apple. More institutions have been more concerned about owning too much than being left out of the up move. So Apple, give it some time to cook. Lock in some gains when you have them. It's a sell the rip environment on Apple. But the way that we know specifically is going to be if we get a surge above $216.50. If we get a surge above 216, then it means that we will push right now all the way up to 220 to 226. Right now, I think we have to watch that 216 level, because if it fades the rip, then you don't want to be holding the bag. It's just going to bleed off some more. Let me know what you are going to do with Apple. It's paid so far to take profits early on strength. All right, let's take a quick look at Tesla. I wanted to talk about this one. It's one that's sort of been running with Apple. Both of these have been underdogs. I think that Tesla has a good opportunity of being strong ultimately at the end of this year. But I want you to see something in the charts that I'm watching that I think is very important. And it's been important in the past, and it could repeat, or as the old saying goes, history doesn't repeat, but it sometimes rhymes. Let's go look at the Tesla chart. Okay, we're looking at weekly candles, and we've got the 50 EMA up on the weekly candle time frame. Each of these candles is 1 week in the market. I want you to see this pattern. I pointed it out to you in the past. We had this incredible all-time high back here in 2021, and from the moment it was made, we had this descending line of resistance that never could quite get above it. And eventually it hit it one more time, and when it fell back beneath the 50 EMA, we had this huge capitulation moment. And then it took a number of years. From the January 2023, it began to move up, but more or less this was just some continued chop. Now, if you look at this pattern carefully, you see that we're really in the same exact pattern, right? After we made that previous high, it's just slightly steeper, but we have the same exact pattern. We've been constantly getting pushed down beneath a descending line of resistance, never quite being able to break above it, right? And what ultimately concerns me is what happened back here when we had that same pattern. It was ultimately when the price got squeezed and pushed beneath that 50. And the minute that happened, then it really saw a huge flush that lasted about a couple months. This is when the stock fell into despair. Now, this could break either way, right? But this pattern is shaping up to be very similar to the breakdown pattern that we had before. I want you guys to be aware of it because we haven't escaped it yet. And it would have to be a massive volume node would have to appear here at the bottom, a volume node, a big old green volume node, and we'd have to see a huge spike above this descending line of resistance that ended up holding. That's the only way that Tesla would confirm to me that it is out of the woods, that it is ready to go on another long-term growth trend. Now, it does have some positive catalysts ahead of it, which have yet to materialize. The market's watching the impact of and growth of robotaxis, as well as the release of Optimus robots. And there's other AI growth that's doing very well, but the market's wanting to get that priced in and see the results. I want to warn you on both of these plays, Apple and Tesla, that even though they're underdogs and even though I like them both, they still haven't confirmed bullish. If it changes, I'll let you know. AMPX is doing extremely well. And, as we've climbed from Friday's lows, as I'm warning that the market has some pullback left in it, look carefully at everything that's up and consider decreasing your overall risk and your overall exposure and getting set up for the next big opportunity in August, which could be that pullback to 610 and or deeper. Let me know what you think will happen. Do you think the markets are just going to run from here and that the worst is behind us? Let me know in the comments section. I'd love to hear about it and why. And what is your hottest investment this week? We've got some earnings ahead of us and tons of opportunity. Target doing very well. DraftKings is reporting tonight. I want to quickly tell you, and I told everybody in the Stocks with Josh Discord, I'm up beautifully on a nice pile of call options on DraftKings from when I originally alerted and I added throughout the dip. I'm going to lock in those gains. And I'm going to just hold a couple runners through earnings to see what might have been. Let me know what you're going to do with DraftKings tonight. They should report by the time this video gets up. Peace and blessings, my friends. I'll see you in the next video. Take care.